Welcome to the IRS Solution Attorney Show. If you have problems with the IRS, don't focus on the negative, focus on the solutions. With the IRS Solution Attorney, Darrin T. Mish. For over 15 years, he's been helping taxpayers with IRS problems reclaim their lives and their financial stability. Now, here's your host of the IRS Solution Attorney Show, Darrin T. Mish.
That would be me. I am Darrin T. Mish, the IRS Solution Attorney.
And I'm your co-host, Katrina Madewell. And I noticed, doesn't the intro say over 15 years? We're probably going to have to update that because that's been a little longer than 15 years.
Yeah, we've been doing the show at least 16 years. I think our anniversary is not 16 years, 1 year.
Radio anniversary.
It feels like 16 years. I think our 1 year anniversary is this month. I don't know what date our first show is. We'll have to look that up.
We can dig for it. I thought it was over a year.
I think it was May 34th. About a year ago.
Holy fat.
7 days ago, you were here.
Right.
But it seems, because time flies, it seems like you were here 3 days ago. It just, every time I turn around, I see your smiling faces, and I know that it's almost time for the weekend.
Yep. He's always happy to see us on Thursday, but it's even happier to see me on Friday.
We're Pat's anchor for the weekends coming.
Yes.
I can tell you that when I'm driving back across the bridge on Thursday mornings after the show is done, I have officially, gone over the hump, and it's all downhill from there.
Wouldn't it be nice to have a 4-day week?
It would be. I've actually done that in the past. Where
my husband has those every week.
I'd work 10 to 12 hours a day and then take an extra day off every week.
I wouldn't mind doing that. 10 hours a day and have those 3-day weekends. Those are nice.
Chris works 4 10s every week, and then he rotates 4-day weekend, 2-day weekend, 4-day weekend, 2-day weekend.
Wow.
So it's like a sweet schedule.
Yeah, not bad at all. What does he do for a living? I don't recall.
City Tampa.
Okay. Figures.
Mayor. I know. Darn city workers.
Mayor.
It's a running joke. City workers don't
work. Isn't he
work.
the mayor?
No. He doesn't even talk enough to be the mayor, Pat. He's been in the studio. You remember that.
He's the mayor of the band.
Yeah. He literally, he's, as many times as he's been in the studio with me, he's never said one word on air, ever.
It's all right. You make up for all of that.
Yeah, I do.
You don't give him a chance to talk.
We're as opposite as I get. Anything you can imagine. We have this joke that even our lip curls on the opposite side. It's even the kids laugh at it. We went out one day and ordered whatever. I think we were at Beef O'Brady's, and they're like, "Do you want straight fries or curly fries?" And at the same time, it's like straight curly.
Opposite.
The kids started dying. They're like, "Man, you guys are so opposite."
So we decided what we're going to talk about on the show about 3 minutes ago, right? We had a little
real
debate.
estate stuff.
Yeah,
Yay!
we had a little debate. It was short. I lost. Because Katrina talks more than I do. Anyone who's ever looked at the transcript of the show can tell that Katrina, in fact, does talk more than I do.
Oh, snap. I've never looked at the transcript.
In fact, I had a client call, a prospect call this week up in Maryland or someplace up north, and they had mentioned that they knew the name of my daughter. And I said, "Oh, so you must have been reading, or you must have been listening to the radio show." And she says, "No, I read the transcript." And she goes, "That Katrina person, your co-host, she tries to get you off track all the time." I'm like, I know. That's part of her job.
Well, you also have some success stories that maybe before the end of the show you can talk about. I saw on Facebook.
Absolutely. We'll have a train wreck of the week.
Right.
For sure.
Yeah, you got a
last segment of the show.
Right.
We have to keep Pat engaged. That's why I talk and I go off topic, because I can always tell when his eyes start drifting that he's no longer interested in IRS stuff, and I just keep that conversation moving. I'm just saying.
When he picks up the iPhone, he's lost.
A lot of people aren't interested in the IRS until they are involved with the IRS.
I would say that's probably most people, right?
Right. Exactly. Those are 3 letters they don't like to pop up in their mail.
Yeah, then when they hear us on the radio, they're like, "Wait, who's that guy again? Oh, yeah, 888-GET-MISH. Yes, I need to get Mish."
Don't forget the website, getirshelp.com. So today we're going to talk about the IRS and real estate investments. And, this is kind of a minefield. There's a lot of people who have rental houses and sort of dabble in it, and they think that they're going to be able to write off any losses that they might have. Back in the Wild West days of the real estate, which I call, 06 or so to 07 or 08.
December of 06 was exactly the high peak of the market, and it changed in January of 07.
Okay, so I call that the Wild West days, and that's when a lot of people would come into our office and they had a tax problem, but they had a bunch of equity in their primary residence or in their, rental properties or whatever, and the answer was quite often, go get a mortgage and pay the IRS off. And then that all changed around 2008 after the crash. Nobody had any equity anymore.
Yeah, because the running joke is all you needed to do was fog a mirror and you could get a loan.
Yeah, that was pretty much how it was. And I actually didn't buy any houses during that time frame. I bought early and then and rode that thing all the way through. But today we're going to talk about the IRS and real estate investments and just, you know, the IRS has been cracking down on investors who attempt to use their passive real estate investment losses to offset other income. I actually had a case, an audit recently, where I had a couple that was, they actually owned, I think it was either 5 or 7 rental houses across, they were split between Texas and Oklahoma. And the couple lives here in Florida, in the Tampa Bay area. And the husband actually had relatively high wage, income. And these rental houses actually had significant losses every year. And so those losses kind of helped to offset the tax that he was paying from his wages. And they had been through a similar audit in the past where the IRS brought up something called the material participation test. And we'll talk about that in a little bit. But they succeeded in that audit. And so they kind of thought that they knew what they were doing going forward. And they kept preparing their own returns year after year after year. And eventually they got audited and they didn't know there had been a rule change, a law change in that interim time frame. And they didn't fare so well on the material participation test because of the documentation requirements going forward. And so we actually lost on that. It was better than it would have been, but they actually ended up having to pay some extra tax because they just didn't have the right documentation that they needed for the to get the passive losses accepted.
Which we talk about that before on the show, that if those self-prepared returns get audited a lot more frequently than the ones that are CPA prepared.
Yeah, I think it ended up costing them about $25,000 with penalties and tax and everything all in. And that's a lot of money, to save the $500 or whatever it is a year to have the return professionally prepared. And I can't remember the exact issue, but it was like one little zinger. It was like one little thing. And if they'd have just had the advice or known about that rule, then they wouldn't have ended up with the extra tax.
We've talked about that before too. I forget, it was one of the shows we talked about. I think it was how to avoid an audit or something. And we were discussing that, hey, that little bit that you pay the CPA can far outweigh anything you'd have to pay later if you miss something like a rule change or deductions they find or that kind of thing.
Right. Absolutely. And it's probably better to have a CPA where you have a relationship of some sort so you can get a little bit of consulting in there in addition to just the tax preparation. That's what we aspire to at my office, but we can't always do that because a lot of times people don't want to spend any time talking about their tax situation. They just want their tax returns prepared and usually with as little documentation as humanly possible.
Can you just make it go away?
And it's because self-employed people are busy. They're busy doing whatever it is that they do. And, I count myself in this sometimes. You don't want to spend a lot of time planning. You want to spend a lot of time doing.
Right.
So,
because, as entrepreneurs, we don't feel like we're actually getting any work done. When we're planning, you have to be in the trenches.
That's for sure. But, there's a really smart saying. I can't remember it exactly, but basically for every hour you spend planning, you save many times those hours doing.
Agreed. Definitely. So talk a little bit about, because, not everyone listening may have rental property. And you were saying in that particular scenario that the people actually were taking more and more passive losses every year. So explain what that means.
So one of the things that they were doing was they were, it's actually okay to deduct the cost to travel to the rental property to inspect it, regularly, to make repairs and
what
things
cost,
like that.
Mileage?
Yeah, like mileage. But keep in mind, the houses were in Oklahoma and Texas, and they live in Florida.
Oh.
So they were going out to, Texas once a quarter to check on these houses, and they were deducting all those expenses.
Now, is that not allowed?
It's allowed.
Or it looks weird? Is that what you're saying? Because of the miles?
Well, it does look weird because it's pretty far.
Yeah.
Right.
And there's 2 of them in 2 totally different states.
Yeah, and the IRS had a problem with the fact that they were deducting that the husband and the wife are going. They're saying, no, wait a minute, you're trying to maintain that only the wife is the real estate professional here, so the husband can't even go, or he can go, but you can't deduct those costs for travel.
So I presume maybe they both flew and paid for 2 plane tickets.
Exactly,
Is that what it was?
Exactly.
Okay.
If they had driven, then it doesn't cost anything.
Doesn't
to have
matter.
An extra person in
Okay.
a car, but it could theoretically cost more to have a hotel, I suppose, for 2 people. But I don't think
Not
so.
really.
I usually just, when I book a hotel, I usually put one person and just show up at the desk and do my thing. But so there were some extra expenses and whatnot. And Basically, under Internal Revenue Code Section 467, I don't do that very often, but I just did. Internal
Nope.
Revenue Code
Never heard 467. Oh my gosh.
It
already?
actually it limits an investor's ability to use passive losses to offset their ordinary or earned income. Okay, so when we come back from the break, we'll go ahead and dive into that a little bit and talk about what that means to people who might have rental sort of real estate.
Okay. So if you have a rental property, you're thinking about buying a rental property, you could call me, but you could also stick around and listen to some of those tax implications before we get back, and you'll avoid yourself some headaches before you have to call Mr. Darrin Mish at 888-GET-MISH.
Or visit the website at getirshelp.com.
Back in a minute.
Welcome back to the IRS Solution Attorney Show. I am the IRS Solution Attorney, Darrin Mish.
I'm your co-host, Katrina Madewell. Thanks for sticking with us for the break.
So before the break, we were talking about the ever so engaging Internal Revenue Code Section 467.
You got to pep it up there, Darrin. You
I
sound
know.
like a regular attorney. The
I know.
Internal Revenue Service Code 467.
It actually limits an investor's ability to use passive losses to offset their ordinary or earned income. So what that means is you can't use your real estate investment losses to offset your normal income, okay? Unless you can pass certain tests. One of those tests.
Wait a minute, to offset your normal income. So you're talking about like if you owed $2,000, you can't bump those expenses to cover that, or are you saying you can't have losses that would exceed your income?
Let me give you an example. So you make 150 grand, wages as a wage earner. So you're in a special tax bracket, right? You're paying more taxes than a lot of people, but you have $50,000 in real estate losses because you're deducting everything under the sun. But you're really you're just a passive investor. Okay, so let me define that. A passive.
Yes.
Most of the time, rental activity is considered what's called passive as opposed to active. Okay, so passive would mean you're not really doing much, right? I have a rental house. I'll tell you right now, I don't do anything. I don't have a management company, but so
Slumlord.
So we actually collect the rent. It's not a slum.
I'm just kidding.
It's a nice smaller house, but we even have a home warranty on the house. So like if something breaks, we just make a phone call. Somebody goes there, they fix it, and we pay them, and it's fixed. Right?
That's actually a sweet idea for an investment property. Get the home warranty.
Because you're deducting that $50 a month anyway, right? You're deducting whatever repairs happen anyway. So to me, I live an hour away from the rental house, so I can't go down there. Plus, I don't know how to fix a water heater.
You're not handy.
Yeah, I'm getting more handy.
You would not want Darrin to fix your water heater.
For the past couple weeks, I've become a farmer, so I have to learn how to fix stuff. So the joke is,
I'll try not to fall out of my chair laughing.
Well, for the first time in my life, I bought a farm, and now there's stuff that's broke that needs to get fixed, and I'm running out of money, so I have to figure out how to fix some stuff. So anyway, so most rentals are passive activities, right? So you're not doing much; you're just collecting rent and making occasional repairs and things like that. As opposed to active, where active would be more like you're actively searching out new rental properties, you're actively managing it, you're actively doing all the repairs, you're actively doing things. Okay, so there's what's called a material participation test for real estate investors, and basically there's two rules. There's the 50% rule and the 750 hours rule. So in order to qualify for a material participation test, the taxpayer has to demonstrate that more than half of their personal services and all of their business ventures for the taxable year were performed in the area of real property, business, and rentals. Okay, so what that means is, as a practical matter, is you have to have a log of everything you do in your professional life so that you can prove that more than 50% of it was pertaining to real property. Does that make sense? So, and then the second rule is that it has to exceed or meet or exceed at least 750 hours during the year. So you can't just say, okay, I'm an active real estate investor and I I can prove that more than 50% of it is in real estate because I don't do anything else, but it's only 300 hours a year. So no, you actually have to have a log. You have to have basically have a daily or at least weekly log of everything you did with a great deal of detail. So we talk about mileage logs all the time, right?
Yes.
And how detailed mileage logs have to be. Well, these material participation logs have to be crazy specific. And in that audit that I was referring to in the first segment, we actually had a perfect material participation log showing that definitely the wife had more than 50%. It was like 100% of what she did was pertaining to these rentals, and it was way more than 750 hours. I want to say it was in the like over 1,000 hours. But
so a comparison for active and passive losses would be like people that are like, yeah, I'm going to fix and flip. That's my job now, compared to somebody like you that has one property and they're like, yeah, I'm not really going to be fixing stuff.
Yeah. So the fix and flipper guy, if that's really his full-time endeavor, and it's not, it's more than a part-time gig, because we figure 40 hours a week, 50 weeks a year, that's 2,000 hours. So 750 hours is really kind of a part-time thing.
It's like a 3/4 the way there. Mm-hmm. 1/3.
So in order to qualify as a real estate professional, you can participate in like 6 different real property sort of activities. So it's real property development or redevelopment, construction or reconstruction, acquisitions, rental or leasing, operation or management, and brokerage, trade or business. So clearly you would qualify
for anything.
Right. You would qualify as a real estate professional, and you wouldn't need, probably, I don't think, to have any kind of log, because I mean,
that's my whole day.
That's what you're doing all day, every day.
Like everything you described is all that and then some.
Do you do construction and reconstruction?
Not per se, but I
you tell people to fix a lot of stuff.
Yeah. Yeah. Like I am educated enough to go in and say, yeah, this is probably this, and know which is the right professional to call, versus I don't know what this is.
So before the show, we were talking about an orange wall.
Yes,
so,
we were.
So sometimes, you walk into a house that you're about to list, and you have suggestions that you make to people to change so that the house would sell better.
Yes. So this particular house, Darrin and I were chatting on the way here to the show before the show, and I was telling him that, there was this house, and I had suggested they take some furniture out. We changed the bathrooms and upgraded those so they weren't Formica. They were actually quartz or granite. And then there was this orange wall that was in the living room as soon as you walk in. And, we had a lot of showings, but in this market with a 2-month supply of homes, which is the absorption rate, that home should have already sold. And so we had to end up reducing the price because it had been on the market and they had to repaint the wall. So experience shows if you do those things first and then list it for the right price, it's going to sell faster for more money.
So, to repaint that one wall was basically the cost of the paint and some brushes, right?
And time, because time is in here. So,
yeah,
that was probably a whole
time,
Saturday.
Of the homeowner.
Right.
And
yes, not the realtor. The realtor is not painting the house, just so you know.
Well, some will. The really hungry ones will, because I've talked to some that will. But in that case, that orange wall probably cost them thousands of dollars, right? I mean,
I think so.
Yeah, just because
we started at $220 and then we had to reduce to $200 with the painted wall to get it sold.
Wow. So
keep in mind, this was almost like 45, 60 days into it. We'd already had several showings. People made offers on other homes, including similar floor plans nearby that were less money. That's what it was.
Right. Gotcha.
So it had the upgrades. Had it just tweaked a couple little things, like taking some furniture out and that kind of stuff initially, would have made a big difference.
Yeah, so the moral of that story is you should listen to your real estate agent.
And the thing is,
suggestions.
The big thing, Darrin, that I think most people miss is the way you live in your house and the way you sell it are two different things.
Oh, yeah.
They are.
Oh, yeah.
I mean, they are for everybody.
Speaking of someone who had their house on the market twice in the last 6 months, for sure, when the house is on the market, it's like it needs to be perfect.
Yeah. It does. It has to be show ready, model condition, at least if you want that higher price. If you don't care and you've got room to take stuff at the lower end of the range, then you can show it however you want.
And we were all about, no, we're getting top of the market.
You've got to show top of the market.
We're going to break the record for our development, and we did, actually.
Yeah, and you can do it if some things are in order. But, the best advice we give people is to pre-pack. If you're not using it now or in the next month when you sell your home, it should be in a box and out of the way.
We kind of cheated. We threw all the clutter in the garage.
It's okay. I'd rather it be in the garage than in the house.
And people would look in the garage and they'd say, oh, yeah, that's
they're moving.
That's a garage with a bunch of stuff in it.
Yeah.
And our stuff will go in there too.
Well, the thing of it is people usually they have a listing budget for what it's going to take to get the house on the market. So then, a lot of times their listing budget is eaten up on the inside of the house, so they don't have any more room to get storage, or maybe they don't want to move it twice, or they don't want to get a pod or whatever.
I always thought that storage was pretty inexpensive, but
it is.
But it's not when you have. We had 3 storage units, and it was not cheap.
And so some people, like, me being ELP, I'm going to give advice a little differently than some people. And so this particular couple that I just shared the story, they're paying off everything. So 2 car payments, a whole lot of debt, a whole bunch of stuff. And the loans are funky. So they're adjustables, interest only. So we're going to get rid of all that mess.
Oh, nice.
When we start over on the next house. And the debt.
That's very nice. So when we come back after the break, is coming up here in a second, and
got a little more time.
Okay, we're going to be talking about some more about the material participation test, and basically, the problem that taxpayers have is if you're making good enough money that you're interested in having passive losses offset your income, then you're probably in a time-consuming career like a doctor or a lawyer or a dentist. People that are working full-time jobs, and that's when the courts are really, they're suspicious.
Doesn't make sense.
Doesn't make a lot of sense. How can you be a full-time real estate investor when you already have some other full-time endeavor?
Yeah.
Right?
Well, they probably look at the careers too, because on the bottom of your tax return, you're always putting what your job title is, right? So
That's
don't
true.
you think they look at those things?
And they use the IRS actually uses that number. So choose wisely when you decide to define yourself.
Ooh.
Okay, so choose wisely because the IRS uses. There's a number. I think it's called a SIC code. There's a number on the bottom for every occupation profession, and they use that number to decide how reasonable your tax return is.
Okay, so we're going to talk about that when we come back. It wasn't on the outline, but that is so relevant. I think anybody listening to the show would grab some value out of that. What do you think, Pat? Agreed?
I agree 100%.
All right, so listen up. We're going to give you a code. We'll be back in a minute.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darrin Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darrin Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get Mish. 888-438-6474. Principal Office, Tampa.
Welcome back. You're listening to the IRS Solution Attorney Show. We hope we're entertaining you today and you're enjoying your ride to wherever you're going.
So we were talking about the material participation test and passive loss rules with regard to real estate investors. And there's a whole bunch more after you pass, the 50% and the 750 hours test. And there's a whole bunch of more elements before you can decide, the courts can decide, or the IRS can decide if you're actually an active real estate investor. It's not good radio to go through all the rest of those requirements, so you just look them up, okay? But
post them on your site.
Yeah,
don't you?
I'm sure we have information about that. You just go to the site getirshelp.com and you can do a search on this kind of topic, and you should be able to find it. But one of the things,
like an IRS encyclopedia over there.
Yeah. So one of the things that was interesting in that audit that we were talking about in the first and second segments, where the people had the rental properties in Oklahoma and Texas, but lived in Florida and were writing off, significant losses for travel and whatnot, expenses for travel, which generated losses, was the problem that they had made is that they didn't do a proper grouping election. Now, here's what that means. So the IRS wants you to treat each rental property like its own separate and distinct little business. Okay. So some rentals you might have a loss, or some you might have a gain, and so on and so forth. And you're not allowed to group them and have them considered as one activity unless you file something called a grouping election. Now, that doesn't seem so unfair as I explain it, right? Mm-hmm. You have to make a one-time grouping election. Here's the problem. There's no form. There's no form for that.
Seriously?
There's no format for that. There's no formal way to do it. And if you make your grouping election, then you better be able to prove that you made it. Now, my advice to this couple was, going forward, what I want you guys to do is I want you to make a grouping election every single year.
So they just generally write this on their tax return?
Yeah, you have to do,
I am doing a grouping election.
Yeah, you have to do like a cover letter, and you can't e-file this because there's no form.
Yeah, but the IRS is so dumb, they might lose it.
Okay, now just
I'm
so
just
everybody
saying.
knows, that was Katrina Madewell.
That was me.
That said that. That was not.
Look, I'm just saying, people have mailed stuff, and the IRS, ironically, just can't find anything.
So that
you
kind of-
cannot say that has not happened
So
before.
that kind of lends us or leads us back to the comments that I make in the past about where if you do mail something to the IRS, you're going to want to make sure you keep copies, right? And people always want to say, well, how long should I keep the copies? My answer, forever. I mean, digital storage is cheap. It's cheap now. So you should just go ahead and keep it forever. And if I was going to be making a grouping election every year because I had passive real estate losses, I would keep a copy, obviously, forever. But then I would also have proof of certified mailing as well.
So you don't think you should just type that on one of those lines in the tax forms? You know how you can just type like itemized deductions?
I don't think that would work. I think you need to make a separate grouping election every year. And I think you need to do some research about how it should be formatted and what it should say.
And probably talk to a CPA about that, too.
And you probably should talk to somebody who specializes in representing real estate investors.
Yes.
You know, I'm not even going to say that I'm the best person to do your grouping election. In fact, I told that couple, I'm not the guy to do it. I just, we've done the research and we know you had to have done it and you didn't do it and we can't prove that you did it. And that was the law that changed from their first audit to their second audit. Gosh. There was a law that actually...
And it's all self-prepared returns like that whole time?
Yeah, and so they were feeling pretty good about doing the self-prepared returns because they had gone through the first audit and it went fine. And then 7-8 years later, whatever, they go through a second audit and they're like, okay, we're going to be fine. We have all these logs, we have all this stuff. And what they weren't ready for is that this grouping election regulation, or I don't know if it was statute or not, but it was passed and they hadn't complied.
I guess I'm smart enough to know that I would not try and tackle that myself, like do my own returns. Leave that up to the pro.
Well, there's lots of people who could probably do their own returns.
Simple returns.
If you're self-employed, if you have real estate, if you have corporate interests, if you have capital gains, if you have anything other than wages, you probably should.
Like my husband could probably file, if he was by himself, he might be a simple on your own filer, but I complicate everything. So
you're giving him lots of credit.
I know.
He might be able to do it.
He might.
Oh, goodness gracious.
But, that's a simple like W-2 wage earner form compared to any self-employed tax complications.
Absolutely. So before the break, we were also talking about SIC codes, right? We were talking about the codes that every occupation profession has a number, and you put that number at the bottom of the tax return, and it helps the IRS computer decide if your return falls within those norms.
I'm trying to remember if you can physically see that number or if it's like an internal thing.
Yeah, you can definitely see the number. Usually the tax preparer or the taxpayer, if they're doing their own returns, kind of picks, looks it up and picks the number. So I looked up the SIC code for disc jockey, and that's 792999. And in Pat George's situation, it's actually a SIC code. It's a SICK code. But anyway, so that's 792999 for a disc jockey. But that's really only a self-employed disc jockey, I think. We'd have to look that up.
I don't know. It's been a while since I played, so I don't know if I'm employed anymore or self-employed,
Hot dog cart.
And that too. I've been too busy doing other things. I've been too busy doing talk shows.
He used to do the hot dog cart, but he gave up on it.
Now, I guess radio producer would be a different SIC code, right?
Likely.
Yeah, if I didn't work for a big company that already took care of all of that.
Exactly. Withheld exactly the right amount of tax so you could have a big fat tax refund so you can go on like a cruise at the end of the year.
Since day one, I have always, no matter what, claimed zero on everything. Is that good or bad?
It's
We're
not
going to take more.
It's
right?
not necessarily bad. It's what you're doing is if you're generating a refund of $1,000 or $2,000 or something every year. What you're doing is you're just giving the government an interest for your loan.
Yep.
While they're withholding extra money, which is fine. Some people have trouble saving money, and some people just like that feeling of getting that quote free money at the end of the year.
Or
It's
maybe they like the feeling of not writing a check to the IRS.
yeah, I like that feeling too, but not enough
Yeah.
to have them over withhold.
Yes.
But,
But you look at that all day. Not everyone does.
well, that's true. I look at big numbers at the bottom of tax returns all day, every day. So it's not necessarily bad. It's just you're giving the IRS an interest-free loan to hold your money while they're over withholding.
But I never would have thought to really pay attention to, because some professions are a little more complicated, and you could probably fall under a couple different brackets. So depending on how, what you're writing off and what that return looks like, you might want to pick a different code over another.
Yeah, I'm sure we were talking about, before the break, we were talking about would certain SIC codes be audited at a different rate and whatnot. So if you were in a profession that wouldn't normally require a lot of travel, I'm trying to think of one, librarian. I don't know, you're a self-employed librarian somehow. I just picked something that, you're pretty much going to go sit in a building, right? So if you had $77,000 worth of travel as a librarian, it might be kind of hard to justify.
Well, I have a story with that.
Okay.
I always have a story for everything, right? But the transcripts are so long. But anyway, so I had this accountant before. I might have shared this before, but I had some write-offs for travel expenses because, I visit peers 4 times a year. My mentor is in San Diego, so I do travel for business for different things, like Accelerate for Dave Ramsey's next month. So I'll be going to that. And so I have travel expenses, right? Hotel, flights, that kind of stuff. Mm-hmm. And so this tax professional that I had, it's not the one I have now, before, she when I gave her all my stuff, she's like, how do you have so much travel expenses? You're a realtor.
Well,
and I just looked at her and I said, I don't think you get it. You may have done some tax returns for some other agents, but I don't know that their returns look quite like mine. Well,
there's another issue too, is that as your income goes up, then your expenses will go up, and sometimes even your expense ratios go up, and somehow the IRS can kind of keep track of all this stuff so that, if you're a 7-figure earner as a real estate agent, your return's going to look way different than if you're making $50,000.
Right.
It's going to look way different. Because if you're earning $50,000 gross as a real estate agent, you're not going to have a lot of travel expenses. You're going to have a lot of car and truck expenses, right? Or
mileage.
You're going to have some, but you probably aren't going to have a lot of travel expenses because you can't afford to go travel.
Exactly.
You might be able to get away with it for 1 year because it could be you just got into it.
Or it could be the annual, like they have state, local, national.
It could be. And
conventions.
So the IRS computer they have what they calculate what are called diff scores, and the diff score, there's one for every line on the tax return for every profession, every occupation. Okay, so and they don't tell us what they are, but the IRS computer can kind of tell if on every line of every return, if that line, if that figure falls within the norms for that industry.
There's probably a little bit of a buffer, I would imagine, right?
I'm sure it's pretty wide.
Okay.
Because they do enough audits in every industry that they know, okay, well, that person, like Katrina, is going out to San Diego once a quarter, and that's an allowable expense because she's doing, she's making things happen versus.
Well, I connect with peers, my mentors there. I get referrals from that, so it does generate business, right?
Yeah, I do the same thing. I have to go to Phoenix 3 times a year, and I'm supposed to be in California right now, but I'm so devoted to the show.
Oh, you did.
That here I am sitting here in St. Petersburg instead of I was supposed to be in Napa Valley right now.
It's too bad we couldn't time that out a little bit differently. We could maybe do a remote from somewhere else. That would be neat. We'd have to get up really early.
Yeah, except for we'd be live on the air at 6 a.m. from Napa Valley,
California. So
the odds of me getting up at 6 a.m. after spending the night in Napa Valley are pretty much 0.
I'd have to have a room right next door. Get up, Darrin, get up.
Good thing it's not video.
Exactly. So I guess we should answer a question from a few of our listeners.
Okay, sounds
good. Your train wreck might be a little long this week, maybe. So we have a question from Irvin. He wants to know how much does an unmarried dependent student have to make before he or she has to file an income tax return?
Way to put me on the spot. Unmarried dependent student, huh?
Yes. So not married. Dependent student would mean that the parents are likely claiming them. So this sounds like, I don't know, my daughter's 16, but I imagine if she were 18 and I was still claiming her, she was in college and she's making money because she's working at, I don't know, Hollister or someplace in the mall. I think that's what Irvin wants to know is, do they have to file a tax return or is there a certain amount of income?
So the short answer is if she has a gross income of less than $6,100, then she doesn't need to file. as long as it's wages. Now, if it wasn't at Hollister working at the mall, if it was like one of my first jobs, which was putting up open house signs or
sign spinner.
My
daughter said one of her friends is a sign spinner.
We didn't have those back when I was a kid, but I used to put up those, the signs, the real estate signs that direct you to the new development so you can go see the new homes. And those go up on Fridays and they come down on Sundays because it's technically
weekend traffic.
It's technically, and it's also against code enforcement. So
no, they're considered temporary.
Okay. Well, where I lived, it was against code enforcement. And so they kind of had like a side deal where as long as they came down on Sunday, they were fine.
People like me have had fights with the county about that.
I was an independent contractor. And so I was getting a 1099, and so that would be different. The limit there would be $600, not $6,100.
Oh, interesting. All those little tidbits. All right, we'll answer another question from another one of our listeners when we come back in just a minute. You're listening to the IRS Solution Attorney Show. If you got a quick question, now's your time to call in, 888-404-1010. 888-404-1010. And if you don't want to talk about it on air, you can call Darrin directly at 888-GET-MISH.
Or visit the website at getirshelp.com.
And what does 888-GET-MISH translate to?
888-438-6474. 888-438-6474.
We'll be back in a minute. Welcome back. You're listening to the IRS Solution Attorney Show. Thanks for hanging out with us. Mr. Darrin T. Mish is your host, and I'm your co-host, Katrina Madewell.
That would be me.
Mr. Darrin Mish.
Mr. Darrin.
Just in case you couldn't tell with the voice. Just saying.
Didn't we have another question?
Yes, we have one more question from Jay. He wants to know, can I receive a tax refund if I'm currently making payments under an installment agreement or payment plan for a prior year's federal taxes?
No.
Yeah, that's the short answer. Sorry, Jay.
Yeah, you got to take care of the prior balance before you're entitled to a refund. Now, let's say you were on an installment agreement and you owed $2,000 and your refund was $3,000.
Then you'd get a little refund.
You get your $1,000 refund, but they want to get paid, and actually, it's in your best interest to get them paid anyway, right? Because all along, interest and penalties are continuing to accrue. Sometimes not that bad, sometimes real bad. It just kind of depends on the balance and how old they are and the situation.
Just knock it out. Get rid of it.
Yeah, absolutely.
All right, so we got a couple headline stories we're going to talk about today, too. One of them is the IRS tax levies cause hardship for Social Security recipients. This is an interesting story with our elderly.
So the IRS can go ahead and levy your Social Security up to 15% is the first threshold, 30% is the second threshold, and now the IRS is maintaining they can levy all of your Social Security benefits for retirement. We're talking about retirement. We're not talking about disability and Social Security disability payments, just retirement, okay?
That's still kind of wild.
But that's their position.
Why and how would they even levy that, though? Because they're probably not even filing the tax returns. They're just getting Social Security, are they?
Well, think about it. Those Social Security payments are federal payments, right? And so it's very easy for the federal government to levy them. So what they do is they just take the percentage out and they send the recipient, whatever it is, less than what was levied. Now, it's not that surprising to me that the IRS is doing this to retired people and that it's causing hardship, because if you're living on Social Security, let's say you're living on your $2,500 a month Social Security check, which would be a pretty good Social Security check.
Yes.
But let's say it's $2,500 and that's your sole income and you owe the IRS, I don't know, pick a number.
How would that even happen?
Well, what can happen is that sometimes there's early withdrawals from 401ks and retirement accounts, right? That happens a lot. The other thing that happens is that sometimes people just don't pay the taxes on their taxable retirement distributions, and then they just end up running, tax debts. And I can't say it's entirely the IRS's fault, but if you find yourself in that situation, you're going to either want to go seek help from a tax professional, or you're going to want to call the IRS and explain to them the situation and try to get that levy stopped. Because if you can demonstrate that it's constituting an economic hardship, you can get the levy stopped. Now, what does that even mean? I just use one of those fancy big phrases, right? Economic hardship means an inability to meet life's basic living necessities,
housing,
like food, clothing, shelter, medical care, transportation, those types of things. And if you can demonstrate that it's causing an economic hardship, they have to stop the levy. So I would submit to you that most people who are living exclusively on Social Security should not be having levies on them because almost by definition,
Right.
it's constituting an economic hardship. But that's one of the reasons why we do the show, is to make sure that people know these things so they don't suffer needlessly. There's so much fear wrapped around the IRS, even
Yes.
amongst lawyers, okay? I represent a bunch of lawyers. I had lawyers in my office as
right.
prospects this week.
All your clients are lawyers and real estate agents. We've already determined that.
Represent lots of lawyers, and part of the reason is everybody's afraid of the IRS, and it's really not that bad of a thing if you know if you know the system like I do.
And so we have one more story. So TIGTA, we talked about TIGTA, so you have to explain who they are. But the TIGTA reports the IRS sends lien notices to the wrong addresses.
Yeah, so TIGTA is it's kind of like the Secret Service of the IRS, but they also are like the internal affairs of the IRS. So it's kind of a bizarre situation. They protect the IRS employees from harm from the public, the crazy people and that kind of thing, but they also are the Internal Affairs Bureau. So it creates an interesting dynamic between the field level people at the IRS and TIGTA. But anyway, TIGTA did this investigation. They determined that the IRS is sending liens to the wrong addresses on a regular basis. I think it's a computer problem. I don't think it's intentional, but it is seriously a problem because they have got to send the lien to the last known address. Otherwise, how are you going to know that a lien was filed against you? Particularly if you move states. If you change states, it's going to be kind of hard to know that a lien was filed against you.
Right on time.
So it's about that time. It's time for the IRS Train Wreck of the Week. This is the segment of the show where we talk about somebody who came into the office and, frankly, their IRS situation was a train wreck. And after they got involved with us, we made sure that they left smelling like a rose. Now, I'm not
Fixed them all up.
Yeah, exactly. So in this case, we had an individual who, I love these cases because they're near and dear to my heart. I never served in the military, but I'm very proud of those who, did make the sacrifices to serve in the military, particularly if they went to combat and helped to protect our freedoms and our way of life here. This particular gentleman, as I recall, was a combat veteran. And then after he came back from overseas in the Mideast, I think it was multiple tours, he came back and he went to the police academy, became a police officer here in Florida, and then ultimately became a SWAT team member. So, I mean, this is somebody who has really, in my opinion, contributed a lot to our safety and security here in the States. He's done a lot of hard work for not a lot of money.
Yes, we owe our military people and our police officers a big hats off.
Absolutely. All first responders, firemen are kind of unheralded heroes, but if my place is on fire or if I have a family member stuck in the house, I want a firefighter to come and, pull them out because I don't know how to do it. I have no idea. I'd probably do it, but I'd die. So anyway, this particular individual ended up owing $32,778 to the IRS. Honestly, I cannot remember why he owed the money. It's not even that important to me why he owed the money. I think it was a retirement withdrawal, early withdrawal from a retirement account kind of thing. I do know that he was in law school. He's actually in law school right now because after his two careers in the service and as a police officer, he decided that he wanted to make that step and go to law school and become a lawyer.
He's probably going to have a GI Bill, so he should.
Yeah, I don't know exactly, but how that benefit
get
works.
Benefits,
so
they serve enough, they pay for college.
His income is rather low right now because he's in law school. I can tell you that law school is a very rigorous course of study. And long story short, we filed an offer on compromise. That's where you make a deal to settle for less. We ended up settling this case for $2,988, so just a little bit less than 10 cents on the dollar. So good for him. And I have to tell you that one of my favorite things about this job is making those phone calls after the offer is accepted. I make all those phone calls personally when I get the formal acceptance, and I get to tell the people that their nightmare is over and that their problems with the IRS are gone, hopefully for good.
So how do you start those calls? Just curious.
There's a little devil that sits on my shoulder that almost every time wants to act like things have really fallen apart, and I've never done that.
Oh, you should. It would be so highlighted.
It would just be too cruel to do that. So I usually
but they would be even more excited after they get off the phone with you. I would so do that.
I just don't have the nerve to do that. So I typically just say, "Hey, I've got great news for you. Let me tell you what's going on." And by the end of the call, a lot of times they're crying. It's that much of an emotional release because if you've had these things particularly hanging over your head for, decades and to have it finally be over, it's really an emotional release for a lot of people.
Well, you're listening to the IRS Solution Attorney Show, and if you find yourself in a position where you need some help with the IRS, where you get an audit, Darrin's your guy. You want to call him at 888-GET-MISH?
That's 888-438-6474, 888-438-6474, or you can visit our website at getirshelp.com, Twitter, Instagram, Facebook.
Darrin_Mish.
All those things. You can reach us there. Podcast, app.
We'll be back next week. Thanks for hanging with us.
Today we're out.